say that 10 years is way too long to wait for you to retire, so let's bring that up to 7 to 8 years. These are 3 things that I personally do to supercharge my dividend portfolio and make me 10% more per year. First, I use a tax-deferred account like an IRA or a 401k to supercharge my returns. Taxes will only be paid on withdrawals. Tax-deferred accounts are especially great because they allow the dividend growth investor to essentially double their compound when reinvesting dividends. Buying stocks that continually raise dividends and reinvesting those dividends without being taxed gives a dividend investor huge returns. Second, I use a very low-risk strategy called selling covered calls to add to my dividends. Once I have 100 shares of JEPI, I look at my average share price and choose a higher price I don't think it will get to in the time frame I'm using to essentially rent out those shares. I will leave a link in the description below on how to sell covered calls, but essentially it's a way for you to get paid rent, or what's known as premium, for simply owning your shares. For JEPI, I don't think it will get to $59 by January 20th, 2023, so I will sell a covered call, and once it is executed, I will get $55 in pure profit. Selling covered calls is one of my absolute favorite strategies to use to increase income in my portfolio, but it does come with a few risks, so please leave a comment below to let me know if you would like me to make a full video on selling covered calls. Last, I create a higher yield yet higher risk dividend portfolio. Instead of allocating 30% to safe dividend ETFs, I allocate 15% to safe dividend ETFs and 15% to high yield monthly income ETFs. I especially love XYLD right now. It offers over a 10% dividend yield and tracks the S&P 500. Just note the stock price may be flat or increase only by a little.